You spot a major support level breaking on your chart. The momentum looks unstoppable, so you immediately enter a trade to ride the wave down. Almost instantly, the price reverses direction, surges back up, and triggers your stop loss. You got caught in a false breakout. To avoid that trap, you need a filter to separate market noise from genuine trends. That filter is the break and retest strategy. This theoretical line chart illustrates how the framework operates. Instead of jumping in right when the price breaks the support floor, you wait. You let the initial surge happen and hold your position until the price returns to retest that exact same level. To set this up, open your charting platform and select your rectangle drawing tool. You will use this to highlight key zones of price action. Applying patience to this specific sequence of events removes the urge to panic buy. It turns an emotional guess into a calculated, high-probability execution. This 2-hour euro to pound chart shows a strong horizontal support zone. Notice the long downward wick labeled false breakout. The price dipped briefly before buyers pushed it back up. Entering a trade here increases the risk of an immediate reversal. On this updated chart, we see a confirmed breakout. A strong bearish candle has closed completely below our support box, meaning sellers are in control. But do not click sell. Entering right now exposes you to a sudden reversal. Sitting on your hands during this initial break protects your capital. It filters out the erratic volatility that frequently forces impatient traders into losing positions. Here, green candles creep back up. Step 3 requires letting the price pull back until it touches the exact zone it broke from. The market psychology has flipped. The old support floor is now acting as a new resistance ceiling. Zooming in on this green circle, we execute step 4. We look for a specific pattern at the boundary, a bearish engulfing candle. The large red body completely swallows the previous green candle, proving sellers are defending this new resistance level. Waiting for this specific candlestick confirmation at a predetermined zone is the dividing line between gambling and executing a calculated strategy. This chart displays the full trade setup. Execute a sell order immediately after the confirming candle closes. Place your stop loss above the new resistance zone to kill the trade if the retest fails. Set your take profit down at the previous swing low. To survive in the market, never risk more than 1 to 2% of your total account equity on this single setup. Stick to moderate leverage. Your goal is to secure consistent, regular profits, rather than trying to force a massive windfall out of a single movement. Hard-coding these strict parameters into every trade ensures that a single failed setup will never wipe out your account. Looking at the wide view of the completed timeline, the price cascades perfectly down from the retest and hits the predetermined profit target. By identifying the zone, waiting out the initial break, and demanding confirmation on the pullback, you successfully bypassed the noise and executed a high-probability trade. No system works 100% of the time. You will experience losing trades with this method, especially when high volatility makes these retest zones messy and unpredictable. Open up a demo account today, comb through historical data, and manually draw out 10 different break and retest setups before you risk a single dollar of real capital. Mastering one patient, repeatable setup provides a more sustainable foundation for a trading account than reacting to every movement on the charts.